A single number appears. $4,200. This is where it starts. Not with millions, not with privilege, not with luck. Just this. $4,200 sitting quietly in a bank account. No one notices it. No one respects it. And honestly, most people would spend it. But what if I told you this small, forgettable amount has the potential to become something powerful? Not overnight, not through hype, but through a force so underestimated, it quietly separates the wealthy from everyone else. This is the story of how small money turns into power. Stage 1. In the beginning, nothing feels impressive. There's no excitement, no validation, no proof that you're doing anything meaningful. Just numbers that barely move. Imagine this. You invest that $4,200. You earn a modest return, say 7% a year. After the first year, you've made about $294. That's it. Less than what some people spend on a weekend. And this is where most people quit. Because the early stage of compounding feels pointless. It feels slow. It feels invisible. It feels like you're missing out while others chase faster money. And psychologically, this is the hardest phase. Because human beings are wired for immediate rewards. We want progress we can see. We want results we can feel. We want proof that effort equals outcome. But compounding doesn't work like that. It operates in silence. No applause, no viral moment, no dramatic breakthrough, just quiet accumulation. And here's the uncomfortable truth. Most people never make it past this stage. They either stop investing, withdraw early, or never start at all. Because the effort doesn't feel worth it. But something important is happening beneath the surface. That $294, it's no longer just interest. It's now part of the system. Next year, you don't earn returns on $4,200. You earn returns on $4,494. And that difference, small as it seems, is the beginning of something powerful. This stage isn't about results, it's about survival. Can you stay consistent, even when nothing exciting is happening? Because if you can, you unlock the next stage. Stage 2, the momentum shift, when it starts to feel real. Somewhere along the journey, something changes. It's subtle at first, but it's undeniable. The numbers start moving faster. Not dramatically, not explosively, but enough to make you pause and think, wait, this is actually working. This is the momentum shift. Let's go back to our example. Years pass, you stay consistent, you keep investing. Now your portfolio isn't $4,200 anymore. It's $20,000, $30,000, maybe even $50,000. And suddenly, the growth starts to feel different. Because now, a 7% return doesn't give you $294. It gives you $3,500 plus per year. That's real money. That's rent. That's bills. That's freedom starting to peek through. And here's where things get interesting. At this stage, your money starts working harder than you do. Think about it. In the beginning, your contributions mattered most. But now, the growth itself becomes the main driver. You're no longer building alone. Your past discipline is now helping you. Every dollar you invested earlier is now compounding into something bigger. This creates a psychological shift. You stop seeing investing as a sacrifice and start seeing it as leverage. You begin to trust the process, and that trust changes behavior. You spend less impulsively, invest more confidently, think longer term, because now you've seen proof. But here's the danger. This stage can also create overconfidence. Some people start chasing higher risks. They think they've figured it out. They forget. This growth didn't come from brilliance. It came from consistency plus time. And if you abandon that, you reset the entire system. So the real challenge here isn't starting. It's staying disciplined, even when things start going well, because the next stage, that's where everything changes. Stage 3, exponential expansion, the power phase. This is the stage most people never reach, not because it's impossible, but because they quit too early, or get distracted, or underestimate how long it takes to get here. But if you stay consistent, something incredible happens. Your money doesn't just grow, it multiplies. This is exponential expansion. Let's continue the journey. Your portfolio crosses $100,000, then $250,000, then $500,000, and suddenly, the growth becomes surreal. At this level, a 7% return on $500,000 equals $35,000 per year. That's more than many full-time salaries. And here's the mind-bending part. You didn't work extra hours for that. You didn't trade time for it. Your money generated it. This is when money becomes powerful, not because of the number itself, but because of what it allows. Options, freedom, control over your time. You can say no to bad opportunities, walk away from toxic environments, make decisions without desperation. And that's the real definition of wealth. Not luxury, not status, but control. However, this stage comes with a hidden risk: complacency. Because once you reach this level, it's tempting to slow down, to stop contributing, to assume you've made it. But compounding doesn't reward complacency. It rewards continuation. The people who reach true financial power are the ones who keep going, who keep reinvesting, who understand that this isn't the end. It's just the beginning of something bigger. Because the final stage, that's where money transforms completely. Stage 4, the power shift. Money becomes influence. At the highest level, money stops being just a tool for survival or even comfort. It becomes something else entirely: influence. This is the power shift. Let's say your portfolio reaches $2 million. At a 7% return, that's $140,000 per year, without touching the principal, without selling your time, without relying on a paycheck. At this point, you're no longer playing the same game as everyone else. You've stepped outside the system, and this changes everything. Because now, you're not just making decisions for today, you're shaping the future. You can invest in businesses, support causes you believe in, build generational wealth, create opportunities for others. Money becomes a multiplier of impact, and this is where the real divide happens. Most people think wealth is about consumption, cars, houses, lifestyle. But at this level, wealth is about control and creation. You're no longer reacting to life, you're designing it. But here's the truth no one talks about. This stage wasn't built here. It was built in the beginning, in the boring phase, in the invisible phase, when no one was watching, when progress felt slow, when quitting felt easier than continuing. That's where power is created, not at the top, but at the start. Final stage. So here's the question. If something this small can turn into something this powerful, why doesn't everyone do it? Why do most people stay stuck while a small percentage quietly builds unstoppable momentum? The answer is simple. Because compounding isn't just a financial process. It's a psychological test. It tests your patience when nothing seems to be happening, your discipline when spending feels easier than investing, and most importantly, your ability to believe in something before it shows you any results. And that's where most people break. Not because they're incapable, not because they lack intelligence, but because they expect speed in a system designed for time. They want visible growth in weeks, in a process that rewards decades. They want certainty in a system built on trust. So they quit. They delay. They hesitate. And slowly, they lose the one advantage that mattered most: time. But the people who win, they don't look smarter. They don't act louder. They just stay. They stay consistent when it's boring. They stay focused when it feels slow. They stay committed long enough for the math to start working for them instead of against them. And that's the real opportunity. It's not hidden in complex strategies or perfect timing or secret investments. It's hidden in something far less exciting: your ability to keep going when nothing is happening. Because in the end, wealth isn't built in one big moment. It's built in thousands of small decisions. The decision to invest instead of spend. The decision to wait instead of withdraw. The decision to trust the process instead of chasing shortcuts. Stacked, quietly, over time. And right now, you're standing at the very beginning. Whether it's $4,200, $500, or even just $50, that number doesn't matter. What matters is what you do next. Because that small amount, it's not just money. It's potential. It's leverage. It's the starting point of something powerful. So the question is, will you ignore it? Or will you make the one decision most people never commit to? To start, to stay, and to let time do what it does best. Music fades softer. If this video changed the way you see money, even a little, make sure you hit like so more people can discover this message. And subscribe to the channel, because this isn't just about making money. It's about understanding how money really works, so it can finally start working for you.